So maybe I should change this channel name from LWC Trading to How to Piss Off Millennials and Gen Z. Because after the Tesla video, I did not learn my lesson, and I'm going to tell you why Starbucks is not a good company to invest in by giving Starbucks an STI. Okay, before we get into it, I know there's probably going to be dislikes flying in left, right, and center. So please do me the kindest favor by helping fight back and hit that like button until it turns blue. Subscribe, turn on the bell, and drop a comment below with what your favorite Starbucks coffee is. I do actually like Starbucks as a brand, surprisingly. Also as well, if you want to check out the Patreon link in the description, you can join our exclusive chat room or the even more exclusive WhatsApp group, only a few memberships left. And then you can see what I am buying and selling as it happens. Now, Starbucks pre-COVID was riding around $90. COVID then hit and we seen the shops close and it fell to a massive $50. Massive drop, $40 drop, and currently we are right back up at $88, near the all-time highs, which is a good recovery considering I'm sure not all the shops are open, and more importantly, I'm sure there's not as many people buying coffee. That scares me a little bit, to be honest. Now, they have a massive market cap of $100 billion US, mega sizing company. They are 33% overvalued if you listen to Simply Wall Street, but no one seems to anyway. And they have a 77 PE ratio. Wow, that means their price to earnings is 77. Why would you buy this company? That is nuts. $77 per dollar of profit. Not for me. Their PEG is okay though, at 2.5, which means the company is growing quite decently. So that does sort of null and void the PE ratio just a little bit, but not fully in my opinion. Can Starbucks continue this growth given the current COVID? I don't think so. I think growth's going to be cut back on most companies right now. So PEGs, I'm not really listening to that much. Now the worrying thing gets worse. Their financial health is not too good. They have 7.5 billion short-term assets with an 8 billion liability short-term, which would be okay if their long-term assets weren't similar. Their long-term assets are 21 billion with a 29 billion in liabilities, which means they don't have enough money to cover. So they're gonna need to borrow money. And in fact, we've seen a massive increase, not even because of COVID, since 2018, where Starbucks have been borrowing a lot more money. Their debt to equity ratio is a crazy 196%, which has been on the increase since 2018. You throw a virus into that situation, and for me, I think that's a very big fundamental problem. I don't think Starbucks is going to go bankrupt. That is not what I'm saying. I'm sure a lot of banks are willing to risk and lend money to Starbucks. I am not saying they're going to go bankrupt, but I do think that debt pile will become a lot higher, and it's already quite high. They offer a dividend ratio of 2.03% at the current price of recording of this video, which isn't that bad. 2% dividend in the current world we live in is not that bad, to be honest. There's been some insider selling, but not too much, to be honest. But also not too much buying, which if you think about the current pandemic, Starbucks should have been a go-to stock for people if it was more financially sound. When it fell down to them low prices in COVID, you think that when the world reopens, Starbucks is a good solid buy, especially given the dividend. But not many people did. Why? That's what you've got to ask yourself. Why was no one buying Starbucks? Why were the hedge funds not buying Starbucks at them low prices? And I do think it was because of the debt pileup. And it's worrying, and I do think there's better investments out there. Like the previous video on Coca-Cola, I think if you want to get into that coffee sector, they own Costa Coffee, and that's a good way of diversifying a little bit. And I think Coca-Cola was a much better buy than Starbucks at them COVID lows, you know, if you're looking at the food and beverage industry as a whole. Now on the positive side, it is very popular with the new sort of middle class that's coming through. The Gen Z and the millennials love Starbucks. They love paying for overpriced coffee. And I know this firsthand because technically speaking, I'm ashamed to admit it, I am a millennial. For the love of God, I'm a millennial, just. And I do actually like Starbucks, to be honest. I love the Frostinos, or however they're called. You know, I love iced coffee, especially in the hot summers here. But whenever I'm in a supermarket and I see a Starbucks or a Costa Coffee, to be fully transparent, I'll go in and I'll buy myself a nice coffee. If I'm getting dragged around the shops with my wife, you know, buying groceries is not that fun, so I usually go and get a coffee and wait. And that's sort of how I use these coffee shops. It's not something I stop off at every 5 minutes. but it is very, very popular with my generation and the younger generation, which are now coming into sort of their middle ages, if you like, and they're coming into the aspect where they actually have money to blow and spend. Which means that students who typically are usually in high debt, we're using Starbucks anyway to fall in love with this brand. Which is crazy because students have debt, Starbucks has debt, you think they wouldn't go together, but for some reason they have. So as I said, on a positive note, that is a good thing for Starbucks, that this generation that loves it so much is coming into maturity and will have more money to spend. That said, there has been many, many competitors, not just in my country, but every country I know pop up all around with a very similar business model and a very, very similar price. So there is competitors coming. We can look at Tim Hortons, we can look at Costa Coffee in Europe, and even locally here, there's a company called Cafe Frey, which I believe is just in Hungary, but they're popping up everywhere, and people love them because they're half the price of Costa Coffee, they're half the price of Starbucks, and to be honest, their coffee is just much better. They have more options, more varieties, and even have nicer sandwiches and bagels. So it's a no-brainer to go to Cafe Frey if you're ever in Budapest, or California Coffee is another one as well. Forgot about that one there. So there is competition coming to the market thick and fast. So I do think Starbucks market share will dwindle down a little bit unless they diversify, which you've seen recently where they've gone into, you know, the canned cups, which I do actually like quite a lot. So yeah, I don't mind the caramel latte, that was okay. You know, a little iced coffee now and then when you're driving, yeah, stops you crashing. Seriously, if you're tired, just have a nap. So why is Starbucks a no from me? Well, quite simply, it is the debt. I can, and I have done, but I couldn't really invest in Starbucks as a blue chip, knowing the amount of debt they have. For me personally, for my portfolio. And if I was getting into the food and beverage industry, I'd definitely be looking more at Pepsi and the Coca-Cola than I would be at Starbucks, to be honest. But yeah, I don't think there's that many benefits, and I don't think there's that many cons. Therefore, it's a no trade for me. I don't think Starbucks is going to go to the moon anytime soon, but I do think with restrictions coming from COVID and debt's been called in and stuff, and maybe even more debt being accumulated, Starbucks could be overvalued. It really could be overvalued. So little upside, quite a decent amount of downside potential. Just not a trade for me, to be honest. And then if we throw in a coming financial crisis, which I do see coming, it definitely won't come this year. It'll come way after the elections, but there will be a sort of pullback or recession in the coming year or two. It has to happen. There is too much debt before COVID even hit, and loans are going to be called in. There's going to be a little correction, if not a full-bore crash. When crashes happen, people don't buy expensive coffee. I think that's going to worry Starbucks investors, and it could drop the price quite a lot. So for me, it's just a very risky stock from that point of view, to be honest. So what do you think? Is Starbucks a good investment? Do you have Starbucks in your portfolio? Where are you in at? What's your favorite Starbucks coffee? Drop your Starbucks comments in the description. Please do be a good person by hitting that like button and fighting the dislike button. Subscribe, turn the bell, check out the Patreon link in the description, the usual old, jibber jabber. I'll see you in the next one. Take care. Peace.